Hey everybody, Alvaro here. Welcome to the Bilingual Stock Market channel again. In this channel, we talk about the stock market, but we do it in two different languages, English and Spanish. So if English is not your cup of tea, you can also watch it for the same video narrated by me in Spanish. And guys, in this video, I want to explain to you some experiences and what I personally do whenever the stock market pulls back in a significant way, right? Or when we go into a major correction of the markets. So for this video, I didn't put anything together specifically, and I just want to develop some thoughts and ideas and reflections about what I do when the markets go down, right? We recently had a pretty decent sell-off in the markets that affected, for the most part, tech stocks, small cap stocks, and special purpose acquisition companies, right? And many of you reached out to me freaking out, asking me, freaking out and very scared, all right? Asking me like, hey Alvaro, is this a crash? How low the markets are going to go? Should I close all of my positions, taking a loss now, to avoid being very invested in the markets if we go into a market crash? And what is going on? So most of you were freaking out. I even have the case of this guy Gilberto. He's a viewer of the channel, of our videos in Spanish, and he left me a comment in the description box of the last video that we posted, and he was asking me, he was very scared because he has a bunch of Neo shares at 49 bucks, and how low is Neo going to go? So I know that most of you guys have had a very tough time with this recent pullback that the market had. And well, I want to use this video, I want to take advantage of this video in order to, as I said before, explain to you the, let's say, key points that you have to keep in mind, okay, whenever, as I said before, the markets pull back a lot, right? So, well, let's get started, okay? I'm going to be pretty much improvising here, guys. So, the first key point that I want to address in this video is dedicated to those who are new to the markets, okay? And why? Well, because, if you are new to the market, my first advice for those newies would be trading good stocks, okay? Try to either trade or invest money in stocks of companies that you know what their business model is about. Okay, that's very important, guys. And why? Well, because the market can pull back at any moment. It can happen, at any moment. Because of bad news or without having any bad news, it just happens. That's the way that the market works. So for those who are new to the market, my recommendation would be trade or invest in companies that you would be comfortable holding if the markets take a hit. All right, that's very important, guys. It isn't the same. Say that you are new to the markets, okay? And let's say that you have $2,000 to invest, okay? And you go and you buy $2,000 of a cannabis company, okay? Because the stock is cheap. It is a $1 or $1 or $2 stock, okay? Instead of buying Procter & Gamble, Johnson & Johnson, or Microsoft, or Apple. So if you invested $2,000, and right after you invested those $2,000 in a cannabis stock, the stock market starts to pull back significantly, what company you're going to be more comfortable holding through a major correction of the market? A cannabis company or Microsoft? A cannabis company or Johnson & Johnson? A cannabis company or, I don't know, Tesla? So this is the point that I want to get across here, okay? If you're new to the markets and you don't have a lot of money to invest in the market, please trade or invest in stocks of companies that you know what they are about, okay? Don't trade or invest in companies that you don't know anything about, okay? So that's my first recommendation for those who are new to the markets, okay? Okay, second, and this goes for everybody, okay? Never be fully invested in the markets. Never. Never ever, okay? So my recommendation in regards to this point is, if you are not using margin money, okay, which is a whole different story. So if you are not using margin money, you should have at least 30% of the money that you want to invest into the stock market always available, okay? Never invested in the stock market, okay? And why? Well, because if you are, say, investing in 2 or 3 stocks and you invest the 100% of your money in those 3 stocks, and if afterwards the stock market starts to pull back, you won't be able to either buy more shares of those companies that you like a lot and that you are investing money in at a lower price, or you won't be able to average down your positions, okay? So it is very important. Or maybe you won't be able to open new positions at a discounted price. So it is very important to always have cash aside, okay? Cash is a position as well, all right? Not only buying stocks of companies, right? And for those who are using margin money, this is critical, guys. Using margin money is something serious, okay? This is serious business. So, and for those who don't know what using margin money is about, when you use margin money, you are basically borrowing money, okay, from your broker in order to either invest in stocks or trade the stocks, all right? So you are borrowing money. This is serious, as I said before. So if you're using margin money, and I use margin money, okay, so I am talking out of my experience, I never use more than 50% of the margin money that I was authorized, that I have available. That's critical, okay? And why? Well, because if you use margin money to trade stocks or to invest in stocks, and the market as a whole pulls back a lot, all right, you can get a margin call, okay, which is a situation in which your broker is going to tell you, hey, we gave you some money for you to trade stocks, and now those stocks that you are trading have decreased too much in value, so you need to deposit money into your account to support the money that you borrowed. So this is very important, guys. If you're using margin money, never use more than 50% of the available money that your broker is authorizing, okay? That's very important as well. Okay, number 3, understand how the markets work. Guys, this is very important, okay? How the markets work, yeah. And why? Well, because stocks cannot go up forever, okay? And most people that have been in this business for quite a long time, they understand, the logical of the stock market, okay? So if you are about to start trading stocks, you cannot wait for any specific stock that you are investing money in to keep on pulling up forever. So take a look at the example that I just said about this guy Gilberto, okay, the viewer of our videos in Spanish. He left me a comment in the description box. He was freaking out. He's investing in NIO. NIO is going to be the second EV player in China after Tesla. That's, in my opinion, that's quite a safe investment. And he was freaking out because his average price in NIO is $49 and NIO dropped down to $44. So instead of seeing that drop as an opportunity to purchase more NIO shares, okay, at a lower price, at a discounted price, he was freaking out because NIO was about to pull back below his average price. Take a look at my case with Ideonomics. As I said in the video that I posted on last Sunday, I was up $1,200 on Ideonomics, guys. All right, when it hit a new all-time high at around $6 a share. And it dropped a lot because the market, or I would say the small cap stocks rather, dropped a lot during the last trading sessions of the stock market. And now I am under the water. And am I worried about it? No, I did my research work about Ideonomics. So I'm just waiting for Ideonomics to drop down to $3 a share to keep on loading the boat. All right, and that's, I can connect that idea with what I just said. So you need to always have cash aside so you can take advantage of any pullback of the market to buy the stock of a company that you like a lot at a discounted price, okay? So this is also very important. You need to understand, guys, that the stock market cannot pull up forever, right? That is something that you need to understand, and that is going to give you peace of mind in case of a major contraction of the markets, okay? Number 4, okay, you need to develop the ability of tolerating pain, guys. This is critical. If you don't have a positive mindset when it comes to feeling pain because the market is pulling back, you are going to, first of all, lose a lot of money, and you're going to end up getting out of this business, all right? Because we are in the risk business, all right? And as I said before, the market can go up, it can go down, and oftentimes we are in the green, and some other days we are in the red. That's the way it works. And there you guys can see my main trading and investment portfolio. If you remember, this very same portfolio was on Sunday of last week when I recorded the last video that we posted on our YouTube channel. The total value of this portfolio was at $142,000, right? So the total value of this portfolio dropped $16,000 in a matter of 4 days. Does that hurt? Yes, it does. But I have the correct mindset to deal with the volatility of the market, okay? And I know that, I understand that the stock market, and this is something that I am going to talk about in a second, has a historical uptrend. So whenever my portfolios decrease in value, I know that that is a temporal loss, okay? Not a permanent loss, okay? Because I have the right mindset, okay? So if you suffer from loss aversion, and there are people that suffer from that, guys. There are people that cannot, stand the idea of seeing that investment losing value. So if you suffer from loss aversion, this is definitely the wrong business to be in. No doubt about it, okay? So, and as I was saying before, if someone asks me, hey Alvaro, what's been the most important aspect or factor that led you become a successful trader and investor in the stock market, I would say my capability of tolerating pain. That's it, guys. If you do your research work, if you invest your money in good companies, and you have the ability, all right, of putting up with the volatility of the market, you're going to be successful in this business, okay? But you need, as I said before, to understand, or you need to develop, rather, the ability of tolerating pain, okay? And when do we need to put up with a lot of pain? In red days, just like the one that we're having today, or in a red week, just like the one that we are having as of now, when the value of my main trading and investment portfolio already decreased $16,000. So another thing that I want to tell you here, guys, is if you don't, and I know that this is a tough issue for, the beginners out there, for the newies, but if you don't like bag holdings stocks, if you, as I said before, you suffer from loss aversion, so place stop losses. Okay, if you're going to either trade a stock or invest in a stock, but you realize that you're going to have a very hard time if that stock, if that security drops below your average price, then go ahead and place a stop loss. Place a stop loss, with a 2 or 3% loss, and that's it. So, and so by doing that, if the market goes into a correction, or goes into a major pullback, you will have a lot of money available to buy stocks at a discounted price, okay? But I know, and I am talking because of my experience here, that when you are new to the market, it is very challenging applying stop losses. It is very, very tough. That is something that I have, a good experience as of now in the markets, and that is something that I still struggle with, okay? So I developed a system. So there are a lot of trades that before taking them, I already know that I am going to place a stop loss because I am about to take a trade of a stock that I won't be comfortable back holding. All right, so I do it on a daily basis. But I know that this is something that is very difficult for for someone that is starting out in this business, right? But that would be advisable. So if you, as I said before, if you can tell, all right, that you are going to have a very hard time back holding stocks if we go into a major correction of the markets, which can happen at any moment. So you'd better take any trade, or whenever you buy a stock, go ahead and place a stop loss, okay? Okay. Next, take advantage of fear, guys. This is very important. And why? You guys already know, this is a very well-known phrase from Warren Buffett. He said, be fearful when others are greedy, and be greedy when others are fearful. And that formula, that phrase, has worked out so very well for me, guys. You have no idea. Okay, so in my case, guys, I have a strategy when it comes to Tesla, okay, because I am a long-term investor in Tesla. And I have been very successful buying Tesla calls, okay? I don't trade Tesla, all right, because I have Tesla shares in my two portfolios, so I cannot trade Tesla the regular way, buying shares and then, at a low price and then selling them at a higher price. So I cannot do that. So whenever Tesla has a major pullback, I either sell put options or I buy call options. And I have been very successful at trading Tesla options. And why? What's the formula that I apply in the case of Tesla's options? I buy options when fear, got to a peak. When I perceive that fear is everywhere, that everybody is talking about a market crash, that, I am in a chat with a lot of traders. When I see that they are getting greedy, Tesla has to go even lower. Tesla is going to crash, and the bears took over, and this is a market crash. That's when I am like, okay, I am about to buy Tesla calls. All right, so when fear gets to, as I said before, to a peak, when you can tell that everybody is shitting their pants, okay, because the market is going to crash, that's when, and of course I have a technical research, okay, when that situation of fear taking over, right, and everybody freaking out, taking losses, saying that the market is going to crash, when that situation matches my technical research about Tesla, I buy calls. And I have been 100% accurate when it comes to trading Tesla options. Whenever you see that everybody's freaking out, okay, whenever you see that there is a lot of fear, that the media is just talking about a market crash and everybody is telling you that the market is still going to go way lower and stuff like that, that's when you can take advantage of the markets, all right? And buy oversold stocks at a discounted price, when fear took over. I have been doing that for quite a long time, and it works. It definitely works, all right? So take advantage of fear, guys. Stop buying, in FOMO when the market is at all-time high, when everybody is buying stocks like crazy because nothing can go wrong. That's when you have to, step aside and, hey, no one is feeling fear here. And when you see that everybody is buying stocks, left and right, and when there's no fear around, that's when you need to, step back and say, okay, I'm going to wait a bit here. But when the opposite happens, when fear takes over, go ahead, man. That's the moment to buy stocks. And that's why you need to have cash aside, okay? In order to take advantage, in order to deploy capital when we have very low prices available, okay? And the market, and I just said this before, but I want to show you guys an example. The stock market as a whole has a historical uptrend. We're talking about 100 years, okay? And let me show you guys something here, okay? Okay, guys, so take a look at this. Here we have a 70-year short of the S&P 500, okay? From 1950 to this date, pretty much, okay? What you guys can see over here, I ask you guys, what do you see here? This is a beautiful uptrend, beautiful, intact. Okay, okay, it isn't intact. Okay, even though we have had ups and downs, we have had volatility, right? But okay, what happens if you sold a stock at a loss in the year 2000, guys, over here? Guess what happened, guys? The market pulled up, and you would have been able to make a lot of money with that stock that you sold at a loss back in the year 2000, because the market pulled up. It always does. What happened if you sold a stock here in the year 2010, okay, at a loss because you were freaking out when fear took over back in the financial crisis, okay, 2009, 2010? What happened afterwards? The markets pull up. So the point that I want to get across here is that we have historical evidence. Okay. By the way, this is a 58-year graph. Okay, my bad. This is not a 70-year chart. This is a 58-year chart. Okay. So we have historical evidence. Okay, that the market has done anything but pulling up in the last 100 years. Okay. This graph, this chart goes back to, I don't know, it must be like 1955 or something like that. Okay. But if we could see way before, okay, the 1960s or the 1950s, we would still be able to see a historical uptrend, guys. And a lot of people lost a lot of money selling stocks at a loss when fear took over during the bunch of market crashes that we have had in the last 58 years. So don't be a fool. Don't take a loss if you are investing in a good company. Unless, of course, you need the money to pay bills or whatever, right? So if you need the money to, I mean, first of all, you shouldn't be investing money that you need to make ends meet, okay? So that's the wrong thing to do. But if you are investing money in the markets that you don't need to pay bills, the worst thing that you can do is taking an unnecessary loss because fear took over. Don't do it, guys. Okay? Don't do it. And take advantage of fear in order to make money out of any major contraction or pullback or major correction that we could have in the stock market. Okay? So now I want to tell you guys my conclusion about this video. So first of all, remain calm. Okay, you guys, that's very important, guys. You need to remain calm. Okay, this is a critical aspect when it comes to dealing with market volatility, right? And you need to understand as well that the market has its ups and downs. Okay, it happens. But guess what? You can take advantage if you do the right thing. If you're investing in good companies, if you always have cash aside, you can take advantage of any major pullback that the market can have. Okay, as I said before, yeah, having cash aside is also very important. Okay, and remember what I just showed you, we have historical evidence of a very consistent and unbreakable uptrend of the market. So what's the likelihood, guys, for this historical uptrend to be broken? And let's say that we enter into a bear market of 50 years. It is extremely unlikely. It could happen, obviously, but what's the likelihood? I would say fewer than 1%, for sure, okay? So never be fully invested in the markets. I already told you that. That is critical. And if you're using margin money, never, ever, okay, you must never use more than 50% of the margin money that you were authorized by your broker, okay? Then, and remember, we are in the risk business, guys. And I am absolutely sure, guys, and I already said this in the video, that most of the big fortunes and wealth that have been made out of this business started, to be made in periods in which fear took over, okay? So fear is your best friend when it comes to the stock market. And on the flip side, greed could be your worst enemy. So take advantage of fear, guys, okay? And well, I think that's it. I think that I already went over all everything that I wanted to tell you guys. Sorry for the improvisation, because as I said before, I didn't put anything together specifically, and I just wanted to, have a chit chat here with you guys, okay? So if you found value in this video, please hit the like button for me and consider subscribing to the channel if you haven't done it yet. And remember, this is the Bilingual Stock Market channel. This is the YouTube channel in which we talk about the markets, but we do it in 2 different languages, English and Spanish. But most importantly, the YouTube channel in which we know that the wonderful world of Wall Street, it's not for geniuses. It is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you in my next video. Peace out. Keep on crushing the markets. Don't freak out, guys. Take advantage of fear and let's make a lot of money. Peace out.